Thanks for joining us. I'm Holly and welcome to 𝐾𝐿 TV. You're watching the Economic Corner, where we update you on all the biggest global economic announcements. First up on the show is a news update that's buzzing on the streets. Chinese regulators have announced an investigation into the ride-hailing app Didi that raised more than $4 billion in a New York IPO last week. China's top government body said it would act to strengthen the protection of sensitive data related to overseas listings and consolidate the information security responsibilities of overseas listed companies. The Cyberspace Administration of China opened an investigation into Full Truck Alliance, another Chinese company that recently got listed in the US. Owing to the regulatory move, FTA's shares dropped 7%. Baidu and JD.com both fell 5%, while Alibaba's stock was down 3%. Didi led the fall among Chinese shares in New York with a 25% decline during the early trades before closing down 20% at $12.49. The company sold stock last week at $14, keep in mind. And onto our next major update on the Economic Corner. The US Defense Department said that it was reversing its decision to hand over large parts of its data and communications to a single company. The Pentagon has cancelled the $10 billion Jedi cloud computing contract that had been awarded to Microsoft. The department now plans to start a new procurement process. The long-running legal dispute to award the Joint Enterprise Defense Infrastructure contract solely to Microsoft will now come to an end. Earlier, Amazon has accused Trump of putting pressure on the Pentagon to award the contract to its rival because of its animus towards its founder, Jeff Bezos. The department said it would seek proposals for a new cloud computing contract from both Microsoft and Amazon now. The department would also continue conducting market research to see if any other companies might be able to fulfill its requirements. On to some more important economic data announcements that have just come in. New Zealand's business confidence improved sharply in the second quarter as the COVID-free economy surged. The positive momentum prompted the New Zealand dollar to surge as investors brought forward rate hike expectations. The NZ Institute of Economic Research's quarterly survey of business opinion showed that a net 7% of firms surveyed expected general business conditions to improve, compared with a 13% predicting a deterioration in the previous quarter. On a seasonally adjusted basis, 10% expected business conditions to improve, swinging from 8% who had expected a deterioration in the previous survey. Firms also reported they were finding it more difficult than ever before to hire skilled labour. Economists at Bank of New Zealand and ASB Bank said that the resulting inflationary pressures were enough to justify pulling forward their expectations for interest rate hikes to November. The New Zealand dollar rose 0.6%. The yield on 2-year sovereign bonds jumped nearly 10 basis points, and swaps pricing rose to reflect a risk of interest rate hike as soon as November. The only other major market where a rate rise is expected this year is Norway, whose central bank has projected an increase in the third or fourth quarter. The Reserve Bank of New Zealand held interest rates in May but hinted at a hike as early as September next year. It's become one of the first advanced economies to signal a move away from the stimulatory settings adopted during the pandemic. The bank's next monetary policy review is due next week. And now it's time for a short break on the Economic Corner, but don't go anywhere because after the break, we'll get you some more important economic data announcements.
Hi, this is Andy Liu broadcasting from 𝐾𝐿 Media Studio in Australia, and I'll be hosting the new 𝐾𝐿 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐼𝐴 TV and join me.
Welcome back from the break. I'm Holly and you're watching the Economic Corner. Let's have a look now at some more important economic data announcements. The Reserve Bank of Australia has announced it'll keep official interest rates on hold at 0.10%. The bank also said that it is ready to start tapering off its unconventional monetary policy measures introduced in response to the economic crisis. These measures, designed to stimulate spending by keeping interest rates low for the next few years, have had two key components. First being the yield curve control program, involving the bank buying government bonds to keep interest rates at 0.1% for the next 3 years. And the second is quantitative easing, involving the RBA buying long-term government bonds to help keep interest rates low over the next 5 to 10 years, but without a fixed goal for interest rates. These measures will be wound back slowly. Following the Reserve Bank's board's July meeting, Governor Philip Lowe said that the yield curve control program would end in April of 2024. The bond buying will continue, but at a lower rate, at $4 billion a week rather than $5 billion. And the next news update comes to us from the US of A, whose services industry activity grew at a moderate pace in June, likely restrained by labor and raw material shortages, which resulted in unfinished work continuing to pile up. The Institute for Supply Management said that its non-manufacturing activity index fell to 60.1 last month from 64.0 in May, which was the highest reading in the series' history. A reading above 50, by the way, indicates growth in the services sector, which accounts for more than 2/3 of US economic activity. The June PMI data indicated a further marked upturn in business activity across the US service sector, supported by a substantial rise in client demand. Business confidence in the outlook also improved to the second highest in 7 years. Rates of output and new order growth eased from May's record highs. However, capacity constraints meant backlogs of work grew at the quickest rate for 10 months. Although firms continued to hire new workers, challenges finding suitable candidates weighed on the pace of job creation. Meanwhile, input prices increased at the second fastest rate on record as supplier price hikes and greater wage bills pushed up cost burdens. Nonetheless, accommodative demand conditions allowed firms to partially pass on higher posts to clients. The seasonally adjusted final IHS Market US Services PMI Business Activity Index registered 64.6 in June, down from 70.4 in May. And on to news from the US to the EU, the seasonally adjusted volume of retail trade rose 4.6% in both the Euro area and the EU in May of 2021. That is according to estimates from Eurostat, the statistical office of the European Union. In April, the retail trade volume decreased by 3.9% in the Euro area and by 3.6% in the EU. In May 2021, compared with May of last year, the calendar-adjusted volume of retail trade increased by 9% in the Euro area and by 9.2% in the EU. Meanwhile, the recovery in UK construction output gained further momentum during June, according to the latest PMI data. Overall, construction activity expanded at the fastest pace since June 1997, supported by another sharp rise in new orders. Severe shortages of construction products and materials resulted in a survey record rise in purchasing prices in June. At 66.3, up from 64.2 in May, the seasonally adjusted IHS Market UK Construction PMI Total Activity Index signaled the strongest rate of output growth for exactly 24 years. Sharp increases in business activity were seen across all three main areas of the construction sector monitored by the survey. And now it's time for another short break on the Economic Corner, but stay tuned for more updates from the pandemic recovery phase. Welcome back again from the break. I'm Holly and you're watching the Economic Corner. Let's now explore some updates from the pandemic recovery phase all across the globe and with some good news for the film buffs. The Cannes Film Festival will be resumed after being cancelled in 2020 because of the pandemic. But if you're one of the lucky few attending the 74th edition of the film festival, you must be vaccinated or tested for COVID-19 every 48 hours. There is a high-capacity laboratory being set up or on-site testing for attendees with results sent via email within 6 hours. And next to the news in the recovery phase, US President Joe Biden is expected to urge more Americans to get vaccinated against COVID-19. Coronavirus cases have begun to rise against the US, fueled by largely the Delta variant. US President will announce a series of measures to encourage vaccinations after officials said the virus was likely to spread in parts of the country with low inoculation rates. And lastly, India's state of Maharashtra is imposing tough COVID-19 restrictions as public anxiety mounts about a potential third wave of infections. Although hopefully they're dealing with the third and final wave and can eventually join the other countries on the path to recovery. Well, that is all from the Economic Corner for today, being a data-heavy day, but stay tuned for more of the latest news and market updates. Holly Shields signing off.